Ladies and gentlemen, let me start with a simple question. Why is most of Africa still so poor? Yeah, it is a resource powerhouse. And if you take, for instance, Canada and Australia, also resource powerhouses, they're arguably two of the richest countries in the world. So what's the one single biggest barrier holding back Africa to become wealthy? I think everybody knows that it's a resource powerhouse. 30% of the world's critical minerals are produced here. Supply chain, you have cobalt, copper, lithium, rare earths, everything is here. In some cases, Africa even has half of the global supply. So if natural resources alone were enough to make a country prosperous, Africa would already be exceedingly wealthy. But resources alone are not enough. Yeah? It needs production to add value. Without it, there's no wealth. And production, again, has two prerequisites. One of them is free trade, which I hope everybody here is in favor of. And even here, I think there's big progress in Africa. So the political foundation for free trade is growing. They founded the African Continental Free Trade Area. And in effect, this could be a single market in the end of 1 billion people. That's more than North America and Europe together. So that's also it's not the problem, yeah? Even with free trade, there is one thing still missing. And that one thing is a free money, a sound money. And that doesn't exist today anymore. 100 years ago, the governments captured the free market in money, free banking, and essentially introduced a money printed out of thin air. In Bitcoin, we call it fiat money. Yeah, it's created by monopolistic central banks, as I said, without anything backing it. And as you know, monopolies never produce good products. And essentially also fiat money, which you all are working with today, is terrible money. We know that. Yeah, by now, its negative consequences are very well known. There's constant inflation, sometimes even hyperinflation. In your neighboring country, Zimbabwe, a hyperinflation created in the end 90% of unemployment, destroyed the country's economy, and that's happening all over the world. Yeah, Venezuela, maybe Bolivia next, it's happening everywhere. Fiat money is terrible. Fiat money also produces constant boom-bust cycles, recessions. It causes asset price bubbles, huge ones. It makes housing unaffordable for us today. And last but not least, it also creates rising social inequality, which leads to social conflict and strife. Until 1913, we had money on a commodity standard. Yeah, so we traders were very important in that. Gold had a stable purchasing power of $20 per ounce, so one Krügerrand would have been $20. But in 1971, when US President Nixon ended, let's say, the already weaker international gold standard, gold was $35 an ounce, so still relatively stable. But in these 50 years since then, gold's price in fiat US dollars has risen to $5,200 last I looked. So 150x. Does that mean that gold became more valuable? No. Yeah, it just means that the US dollar, the fiat US dollar, became practically worthless. Today, it's not even 1% of what it was worth when Nixon pulled the rug on the world economy. So one of the horrible things about the fiat dollar is, of fiat currencies in general, is that there are constant exchange rates, which create totally unnecessary friction in international trade. Just wasn't there. Yeah? Under the gold standard, you also couldn't have those huge trade imbalances, which today create geopolitical conflict and even trade wars. Because when one country had a trade surplus, and one country had a trade deficit, the gold from the trade deficit country would flow to the surplus country. And as we know, Nixon stopped a warship from France, which was supposed to transport gold from the United States to France to equalize that. So that was the moment when the gold standard, even the weaker international one, finally collapsed. And as you all know, this also is a big contributor to international tensions. In Africa, I think it's even worse, because most countries are smaller economies, a bit fragmented, and the fiat money, in fiat money, politicians always have to create new regulations every year. Something pops up which might break down this money built on sand, on thin air. And so they need regulation over regulation, which makes trade finance extremely complicated. So to prop it up, you essentially have to deal with more nonsense pretty much every year. And Basel III capital rules, for instance, make lending more expensive. Sovereign risk exists with the fiat currencies of the countries. Collateral increases, which means you cannot unlock the capital needed to fund long-term projects, which keeps little, small, emerging companies poor because of bad money. Also, fiat money creates a lot of problems. So for instance, nobody on fiat is too big to be debanked. Trafigura, one of the largest commodity traders from Switzerland, learned it the hard way when a French bank debanked them, Paribas, because they did sugar trades with Cuba. Even though none of the two companies was involved, was American, but they used the US dollar to do the trade, and then they're supposed to be under the political jurisdiction of the country which effectively owns the dollar today. On Bitcoin, by the way, this cannot happen because Bitcoin is supranational by design. It's ruled not by a nation state, it's ruled by mathematics. Can't happen there. The other one is you sometimes get really absurd results with fiat money and the fiat banking system which has been captured by the politicians. For instance, there was this case of this Indian trader who arranged a sugar trade between Brazil and Indonesia. But the Indian banks then blocked the payment. Why? Because there was an export ban on sugar in India. So, and even though the sugar never even touched Indian soil, the fiat system just blocked it. Yeah? Nobody can block your access to Bitcoin. You just download a piece of software and you're on permissionless. Exchange controls, and another biggie. Yeah? If you want foreign currency these days, you need to essentially deposit your local currency with your bank. The bank goes to the national bank, and then you wait and wait, sometimes even up to 12 months, I hear, here at the conference, till you finally get the foreign exchange. So the buyer's ready, the seller's ready, the goods are ready, the ship's ready, but we're waiting for fiat money, a terrible, terrible product. And I guess everybody talks a lot about this liquidity problem, the trade finance gap, those $2.5 billion, which cannot happen in fiat because of all the complications, which are just too much for the little companies, for the small and nowadays even medium companies. Somebody here told me at the conference that practically there's no deal ever happening again under $5 million because it's just not worth it with the effort. So that's all this complex regulation which props up the fiat system, including the goals of the politicians in mass surveillance, which go unchecked. Yeah? And the funny thing is, developing countries need those small and medium enterprises because they are the driver of job growth, of wealth, of innovation. So without that, you're stuck in a rather stagnant economy, which is not good for wealth. The worst in fiat is still to come, which is called central bank digital currencies. Essentially, it will be a government money which can be switched off at will. Whenever you utter something which the government doesn't like or have an inconvenient political opinion, switch off a button. Now, these monopolies also try to suppress Bitcoin. Yeah? They claim all kinds of nasty things about it, and particularly they try to keep banks, licensed bank, politically captured banks, from using it. So the risk rate for gold under Basel III is 0%. The risk rate for any currency, even Zimbabwe's, is 0%. And on Bitcoin, they put a risk weight of 1,250%. Yeah, so they are scared, I'll save the adjective, they're scared of the upcoming free money competition. Bitcoin is already the 6th largest currency in the world. That was roughly at the end of Q3. It's a bit volatile still, we'll come to that. But it actually shows it's already bigger than Australian dollar and Canadian dollar together. And remember, those are resource powerhouses too. And the network continues to expand, so it's bigger than silver. Yeah? And obviously, it's trying to replace physical gold with digital gold over time. So that's what Bitcoiners essentially expect to happen. Also, 2 years ago, the institutionalization of Bitcoin started. Exchange-traded funds started to collect Bitcoin. So-called Bitcoin treasury companies started to accumulate Bitcoin to make it accessible in the institutional frame. There's about 300 billion of Bitcoin, US dollars worth of Bitcoin now in the institutional sector, ready to be used for various purposes in the real economy. Bitcoin circular communities are popping up all over the world. Every month there's a new one. You in South Africa, you have 3. The most famous one, because it was one of the first, is some 4 hours from here in Mossel Bay, a place called Bitcoin Ekasi, where people earn Bitcoin and they pay at shops in Bitcoin. And even more, meanwhile, 650,000 shops in South Africa, you can go there and you can pay in Bitcoin. That's one of the most advanced countries in that. I think the second largest after the United States, which has Strike, which supports Bitcoin. So the last mile problem is solved. It's now ready for us. And what does it mean? Yeah? How do we bring Bitcoin into international trade to help it work? Essentially, the answer, interestingly, is centuries old. It's the good old Bill of Exchange. And in Vienna, my country, as Austria, in 2017, you may all know, the M-letter model law was passed, which essentially now allows bills of exchange on Bitcoin cryptography. Same technology, not only anymore on paper and wet ink. So that opened, so to say, the possibility to bring Bitcoin into international trade. And once you have that, you get something extremely, extremely powerful. Because, as you all know, Bitcoin is unstoppable. It's always on. It has never had even a second of downtime for the past 12 years, which a normal system can't do. You don't need a middleman anymore. Yeah, you can use, let's say, non-bank providers if you want to, if they add value, but you're not forced to it anymore by legal tender laws or central bank monopolies. And the money is absolutely neutral, so in terms of the geopolitical vulnerability, it just doesn't exist, because no country has ever managed to suppress Bitcoin. So what's happening? With Bitcoin on world trade, Bitcoin is always liquid because any buyer and the seller can always exchange a bill of exchange, and the real bills principle, so-called, has been known for something like 400 years. The banking regulations don't apply. Yeah? It's really buyer plus seller who need to know, who enter a credit relationship. There's no intermediary which can be tasked, let's say, with police work effectively, which is what the governments are doing to the banks. You completely bypass sovereign risk because there's no issuer, no monopolistic state issuer. And yeah, as I said, if banks provide value in this whole thing with guarantees, with the balance sheets, they add value, but there is no extra cost for it because of the nation-state monopolists cashing in. At this point, I think it's important to point out one important thing. Bitcoin is still volatile. It's very volatile, pretty much even more than gold, because it has not yet monetized. It needs to monetize to stabilize, and this is where you all come in, and this is why we are here and have a booth here. It is, and it always was, international trade on gold basis, which stabilized the purchasing power of gold for centuries, for millennia actually, yeah? Until 1933, until the nasty fiat stuff came in. So as soon as trade starts to move denominated in Bitcoin, you can expect Bitcoin to stabilize. Until then, you just have to use the normal hedging mechanism. There's about 1.4 trillion in transactions every day on Bitcoin against fiat currency, most of it dollar. So this new system is extremely simple. Effectively, you can have it on your phone. It's just an app. We have a reference app. It's an open source protocol. Anybody can copy it. Anybody can use it. It's completely free. It's completely interoperable because it's completely open. Nobody owns it. It's like Bitcoin. Anybody can do code and run it. So the total history of bills of exchange is at your fingertip. You can see if a payer has been honest throughout his lifetime, even for each single signer. It is encrypted on the blockchain, but between buyer and seller, that data can be exchanged in an appropriate form. So if you're interested in that, if you have questions on Bitcoin, come visit us at our booth. We're on the back wall. We can even onboard you to this system in about 2 minutes, which is a tad faster than you onboard a bank these days. And as I said, all of you are very important to bring the money, so to say, back on sound money principles away from fiat. Thank you.